Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, February 20th, and this is your end of day recap. So, theme of the day for the day, I would say small rotation out of growth for the most part, and I will go over a couple charts. This is, I'm going to go over a couple charts that I've gone over before that I've talked about being the ratio of growth to value being a bit stretched. I'll also show you a couple other charts too, but this is, I think, just all a part of trading. Today the Qs finished down 90 basis points. They felt a little bit more of the pain today. S&P was kind of in the middle between where small caps finished, which I'll get to them in just a second, but S&P was only down 40 basis points, not that big of a deal, and small caps outperformed up 20 basis points. So kind of a little bit different price action than what we've seen, and I know that's a little bit different, I think, for some traders to kind of get their arms around because some of these groups just haven't been performing very well. So, for example, the banks were at 1.4%. I don't hear that too many people like getting excited about that. But it's nice to see them outperform, and I'll get to that. I'm going to get to that chart in just a second. Also, retail was very strong today. That group finished up 2% today. So it's funny to see. You look at the Qs, see them down close to 1%, and they were down, much more than that at one point today. I think they were down, about 1.4%, 1.5%. But look at your retail shares. What was up so much in XRT? I actually did not see that. XRT, and let's look at the movers of the day. Was it one particular? Oh, it was stamps.com. Okay. Well, that makes sense. But also Grub also had a nice day, and you could see there was a lot more green within this group. So I think if you take this name out, keep in mind it's an equally weighted ETF, so it's not going to skew it that much. But you could see there was definitely some strength going on. It looked like there was a normal day for most of retail. So let's get to the charts of the charts of the day. Right, so this is one of those things where, if you watched yesterday's video, I talked about how it was risk on. Well, when you have a risk on day like that, it's sometimes we forget, right, that those days, you just don't get those days every day. It's not normal to have a risk on day every single day, right? We had a lot of things like I've talked a lot about clean energy, and some of those names still outperformed today. But when you have a day like that, you have to remember not to get greedy and just to kind of roll with the punches a little bit, and say, hey, I'm going to hedge a little bit after that, or I'm going to take more exposure off so that you don't get caught in this. Now, I've been talking about this for probably about a week and a half, 2 weeks, talking about how growth has gotten more and more. I've been calling it stretched, right? So in this chart, and again, you've probably seen me go over this a few times. Value versus growth. Value is in the numerator. This is large cap. I'll bring up small cap in just a second too, but you could see like this normally doesn't happen, and eventually what you're going to see is a little bit of, I don't know if a check back all the way to the 50-day moving average, but at least to see value outperform. That's perfectly normal. You can't have growth just continue to just get more and more stretch. So my analogy is it's kind of like a rubber band, right? You keep stretching this rubber band further and further and further, having just some parts of the market outperform and not others. You're going to get a kind of a snap, and that could hurt a little bit if you're exposed too much to growth. So I've been noticing this for a while, and it's one of those things where how I address this in the weekend member video, and I spent about 5 or 10 minutes talking about how I was concerned about this. You have to be smart with your positioning, right? And I talked about certain things that you could do. Just not necessarily. And what I'm saying is, you don't have to jump into value. It's just you want to make sure that you're not overexposed in growth, because one of the outcomes that I talked about is you could actually have growth names just be up a little bit, and I'm sorry, value names just being up positive on the day, but you could have something like you had today where growth kind of got hit over the head. And this line will go higher just because growth went down a lot more than what value did, right? So it doesn't have to be one is down percent, one is up 2%. You could have a multiple of outcomes that would get you back into line with this, right? So that said, I'll go through just, I wanted to bring up a couple of the other ones just so it kind of makes a little bit of sense. But the other one is IW. And I've literally have been bringing these up like several times, but it's the same story here, right? And if you want to look at these in terms with the moving averages, but you could see how far this thing is below the moving average, right? So again, putting this in perspective, it doesn't necessarily mean like value is going to like take over. It just means that one has gotten a little bit ahead of the other, and they need to correct a little bit, or what's called a reversion back to the mean, right? So in that, you make adjustments in your portfolio. And again, we went over this in the weekend video. If anybody wants that member video for free, I'm happy to send that because this is a public video. But I'm happy to send that to you. And I'll talk about what I did too in my portfolio in just a second. Just the last chart that I wanted to show you guys was Qs. So if you're not familiar with those ETFs, those value versus growth, you're going to see the same thing. And I think if I want to, how do I want to show this? Probably IWM, just so it's all the same way. But it's a very similar little move here too. So this is also the same thing, right? Also has the same relationship where so a lot of that is going on under the hood. I've been waiting for this to happen, and I kind of want small caps and maybe even banks to outperform. I think that would be very healthy for the market. Seeing this get further and further below the 50-day moving average is not healthy, I think, for the market, right? Because you're going to have that rubber band, and when it snaps, it's going to hurt more. And the further that this gets, would go south of the 50-day moving average, the harder the snap is going to be, in my opinion. So we saw a little bit of that price action, and again, what happened? Like, so who's doing this, right? Who sells like that? I think a lot of it is model driven. Right? Somebody is looking at something similar that I'm looking at and saying, hey, I need to really get out of growth stocks and rotate into some other ones. The problem is that growth is not one for one in the indices. So for example, if you did this in the S&P, if you said, hey, I'm going to basically tone down my weighting in growth stocks, those are bigger. That's a bigger component in the S&P than it is in than value stocks, right? Those are bigger weights. Tech is the biggest weight. All right, so moving on from this. So how did I trade this today, right? And you could see. So I basically follow the same script, right? It's nice to have a same game plan when this type of thing happens. Now, first of all, I got caught in a trade. So the issue and why this is not like oh, it sounds so simple. The problem is you don't know what day that's going to happen, right? If you go back to my analogy of the rubber band, it could continue to stretch. Like if it didn't happen today, it could have happened, next week too. You just don't know what day it's going to be. So you have to really be careful with the only thing you just have to control your positioning, because no one has a crystal ball and know when it's going to be the day that basically happens, right? So I got stuck in a trade right on the open, right? So I like to talk about my mistakes too, but that's going to be the situation. If you've been playing this trend, there's things that you could do that we did, this week. Like I went long bonds, I went long TLT, and I took profits in that trade today, right? I was able to get out of this for 185 today. I took a couple targets today and got out of the last position somewhere today. 210 was my final exit in bonds. So having something like that on, I also at the end of the day, I sold call spreads, right? Which is a bearish trade that I did. So I was able to take that trade off. My final target was 40 cents. I sold this just a $5 wide S&P call spread. So I was able to make profits on that trade as well. So those are the kinds of things that when you see something like that, when a ratio gets that or that is outperformed that much, you put on some of those defensive type trades. And again, going back to yesterday's video where I talked about, where up here it said risk on day, you make some adjustments when that happens. Either you take off more risk or you put on some type of a trade. That's usually the adjustments that you make. Okay, so my game plan. So even though I got caught in this trade, which is gonna happen, right? Well, you're gonna get caught in trades from now and then. That's perfectly normal. But I like to illustrate that because it wasn't a perfect day for me by any means. But so what I do once we have this volatility, I kind of stick to a game plan, right? So I think I took that trade off probably in here, and then what I like to do is, I like to look for levels that we are trading against, right? Is there support? Once we have one of these washouts like this, is there support? How big is the support? And what I found was this bottom of value, right? Which we hit earlier in the week, and we went lower, but notice none of these bars closed. So again, the market webs indicator giving me kind of a game plan, setting me up for a roadmap, and then enforcing a game plan. And I said, okay, perfect. We've got some support. I'm not 100% sure that it's going to hold, but I'll buy the dip a little bit. And when I do something like this, I make sure that I'm not buying huge. I'm just, I have certain trades that I like to do when we get that, and I'm okay if it doesn't work out. I'm not going to be like, my day's not going to be totally shot, or my week's not going to be totally shot, because sometimes we've had multiple day dips. That happens. We just haven't had it happen for a while, but we do get multiple days where we're down. So you have to be a little bit careful. You can't just blindly buy the dip, in my opinion. But you could do it, kind of surgical, right? Which is putting on call spreads that expired for tomorrow. And again, the worst I can lose, and that's the beauty of options. Sometimes I talk about the negatives with options, but the positive is you can only lose what you're putting in for the premium. So you have to make sure that you're sizing these right. I also liked buying after Tesla got pretty washed out, buying a little bit of call spreads in there, and that worked too. PayPal was another one too. So the other part of the game plan is paying attention to what I'm seeing on the tape. Are they buying? Are they still loading up on puts in terms of the institutional option flow that we're seeing, or are they starting to buy the dip a little bit? I saw both. I saw the usual, like, oh my God, the market's going down, I need to hedge, which is the absolute wrong time that you want to be hedging. But we see those trades on the tape all the time in the indices, right? So we saw those in SPYs, Qs, things like that. And then we started to see some single stock call buying, which is basically what I'm looking for. So PayPal, we just a little bit, right? And then what I do is I look at the technicals, and I said, and I tweeted this out too, so you could see the chart. But I said, hey, we've got a level to trade against, right? If we don't have a level to trade against, then the trade is not appealing, and I don't take the trade on the tape. But if I've got something like this, where I would say, okay, we've fallen right into support. So that was the trade that I took in PayPal, right? And I was able to get out of that, for a nice little profit. I also got out of some other trades. I took off the SPX spray. So again, these were not huge winners because we just didn't get that powerful of a bounce. But hey, I was able to kind of turn today around a little bit. So this is my short-term account, right? That I'm doing the option trading and also some stock trades in. Here's my tactical portfolio. What helped me, and again, you could see most of these names. I don't normally show this to on the public video, but I'm going to be probably rebalancing this thing tomorrow a little bit. But you could see, I outperformed again today because most of the names that I have in here are growth, right? So what I've done is I put in TLT and I put in some cash. This is short-term bonds, but I've got that buffer of 15% so that if growth sells off, I'm not fully committed in the portfolio, and I could still aim to outpace the S&P, right? And I basically have been if we go to this portfolio and we click on the link, which is publicly available, you could see that the blue line, which I'm very happy. Sorry, I'm taking pride in this because I do work hard on this. But you could see the blue line is now above the green line, so our portfolio is now nicely outperforming the S&P. So I'm super excited about that. We started to kind of catch up, after I started this portfolio back in August of last year, and this is when we where I underperformed because I had too many growth names back then. And if you remember back in the fall of last year, for about a month, value outperformed. So I trailed a little bit. Took me a little while to catch the market, but I've been outperforming since we've had this. Back in the fall. So I continue to kind of look forward to this and try to outperform and try to really help. Of course, everything that we're going over is for information purposes only, not giving out any advice or recommendations. But these days, and this market has been really fun to trade. You just have to kind of be, as I always like to say, one of my favorite sayings is, you just want to make sure that your risk doesn't get over the tips of your skis, so that these days sting that much. It's perfectly natural to have, when the Qs are down 1.5%, to be, to have a red day when that happens, if you're positioned more or less long, like I am, the market. But you just don't want to have like a disaster day, and that's really what I try to help traders with. All right, guys, so that's it. We'll see how tomorrow shapes up. Tomorrow's Friday. We know that Fridays have not been great, so I'm not expecting anything major. And I've, have my risk, my portfolio adjusted for that. And if we happen to get a nice day, then so be it. All right, guys, have a great night and see you tomorrow.